Well, good day. It's Fred Eckert with another Fred Talk, and today I want to ask you this question. Are you looking to downsize or sell your home and you're over 55? If you are, you may be worried about taxes, capital gains taxes, and also if you buy a replacement home at a higher tax base than you are now, particularly if you've owned your home for, say, 15, 20 years, you're going to have a relatively low tax base because of Prop 13. So here's the solution for this. First of all, capital gains. Most of you should know that you get either $250,000 or a $500,000 exclusion if you're married for capital gains, and you also can transfer that property tax base, that low tax base, to a home of equal or lesser value, provided you are owner-occupied and one of the two people or yourself are over 55 years old. So let's say you sold a home for $800,000, you want to buy a place for $700,000, but your tax base for the $800,000 was based on maybe something you bought many years ago for $200,000. So your tax base would be based on roughly $200,000, and you could take that tax base and transfer it to, say, a home for $700,000 that you bought to reduce your cost. Now you'd have $100,000 cash, and you'd also have a tax base that was based on your previous one. So here's how this works. You get an inflation factor of either 5 or 10%, meaning sell my house now, buy a place within 1 year, I get a 5% inflation cost on the outlay. If I wait 1 year but not more than 2, because it's a plus or minus 2 years, I get a 10% inflation factor. I can also buy a new home and then sell my other home later and still take that transfer, but now it has to be equal or lesser value. A couple other things you want to know about this. You don't have to be a citizen to take advantage of this. You just have to be a property taxpayer. If for some reason you're getting a divorce, only one person gets to take this 55, the property tax transfer to new property, so it could be something negotiated, whatever. And there's a way to use a lease option if you want to try to use the 1 year to get a 10% in case you want to be up a little bit higher than you normally would be. There's a way to do that by moving in, paying a large option payment, and then exercising the option after 1 year. I know I'm covering a lot of stuff here. Hopefully you can see my contact information below me, but it's Fred Eckert at eckertf@ctt.com and also 619-507-5688. A couple other things to be aware of. There is an effort to, in California, to make portability of the Prop 60 transfers recurring, meaning you could use it over and over again as long as you're over 55. There's some pushback against that from some folks who say that's just going to benefit a lot of rich people, but it's there. Also, there's an effort to do away with Prop 13 for commercial properties, particularly those people that have more than 50 employees, but also that have more than $2 million in real estate. So if that applies to rental properties, there's some people that maybe have 3 or 4 rental properties in California that could be hurt by that. So I want to make sure you know about that. Also, if you live in another county, remember this Prop 60 is available in every single county throughout California. There are 11 counties that allow transfers to their county. San Diego is one of them, Orange County is another one, Los Angeles, Riverside, there's a number of them like that. And I can give you more information about that. And then the last part of this, I want to make sure that you know. This is one of those things that, if you know about it, you can take advantage of. If you don't know about it, you can't take advantage of it. So make sure some of the people that you know have this information. You can always call me. They can contact me anytime, evenings or weekends included, and I would love to do your title business. So make it a great day, and again, if you have any questions, 619-507-5688 or Fred Eckert, which is at eckertf@ctt.com.